We will start in a few minutes. Please take your seats. We will start from small introductions. Okay, let's move to the seats. Please take your seats. Okay, so some people still stay in Davos. Not everybody move home. So we will start in 7 minutes. We have a few minutes for small introductions, just to get connected and to warm up. This is a good opportunity to say a few words about yourself and about your idea, but say it in a way which will change other people. So we hear your idea and then we start do something differently. Who has a small story introduction? Okay, I'll give you an example. I'm Valentin Preobrazhensky, CEO of Latoken. We are building a transborder money and asset market. So my dream is to help billions of unbanked to get access to financial system, to get loans, to invest in their education, health, so their productivity grow. And they need this decentralized financial system for this, accessible via internet without banks branches. And the challenge is to make it compliant and to make it properly governed in the best interests of these unbanked people. So here's my introduction. Who is next? We have 5 introduction slots. Okay.
Hello, everyone. My name is Arifa Khan. I'm the founder and CEO of Himalaya Capital Exchange, HCX. My dream is to make millions of small and medium enterprises everywhere access IPOs on the blockchain and issue shares as tokenized securities, and without the need for investment banks and without having to pay any intermediary fees. We are the world's first attempt at automating investment banks with algorithms and smart contracts. Thank you.
Thank you.
Christopher Mbanefo. I'm the CEO of Oxyzen. We're developing a blockchain-powered solution platform that enables CO2 emitters to directly contact, transact, interact with CO2 converters. CO2 converters are defined as entities, stakeholders that have a natural carbon sink that are able to use, we are using a global metric to measure the capacity to absorb CO2, which is then tokenized, and then it can be placed on a global market for emitters to directly contact and have it offset. So for the first time, you have a solution based on a global metric, and you can answer 3 critical questions. Where, when, and how is the CO2 offset? And that's effectively the way that we are contributing to climate change, which is an important factor for us.
Thank you. One or 2 slots. Okay, you're closer.
Close. Hello, my name is Pablo Coirolo. I'm CEO of Light 47. We're an exchange in Liechtenstein, and we're building a bridge between Liechtenstein and Latin America, where we launched Crypto Bay Montevideo. And we're very interested in working with community-driven development and the use of blockchain for community-driven development. So that's the basis of what we're doing.
Thank you. Okay. You have a long hand.
I have a very short dream here to present. I want to use blockchain, and I'm actually using it to deploy self-organizing communities that can respond much more effectively to a disaster, to save lives, than the government agencies do.
Okay, great. Okay, so this is the last very short introductions.
Should I just stand here? Oh, great. So my name is Bonnie, and I'm actually from Australia. I run a blockchain consulting company working in strategy, tech, and legal. And before that, I was a lawyer at Baker McKenzie in Silicon Valley and in Sydney. And what brings me here is really serendipity. I was working with a client based out of Netherlands called Tyken Tech, and we work with the UN and Dutch Red Cross on identity systems. And I heard about this, and I was really interested to cover the program for those back in Australia. So I really look forward to the conversations today. And in particular, shout out to Professor up there. I actually heard you at Consensus and Ethereal, and I really liked your points. So I'm very excited to be here. Thank you.
Thank you. Okay.
Hello, my name is Tomer Sofinzon. I'm founder of the Pillar project, doing lots of things on blockchain, but what motivates us at Pillar is to help users, individuals around the world to take back control of their data and essentially to reinvent the way that data is owned and exchanged and consumed, putting the user in the center and giving us the freedom to live in a world that is decentralized and when we are at the center of the ecosystem.
Okay, thank you. So one of my personal goals for this forum is to get a lot of feedback on the potential emergence of a governing body to manage supply for cryptocurrencies for emerging markets. And when I was thinking who is the best source of this feedback, then immediately I recall Nouriel Roubini. So it's a good stress test for any kind of financial market idea, and which is very helpful to find how to make something really useful for people and avoid unnecessary risks. Then after we arranged it, and thanks for agreeing to come to our forum. That's a big honor for us. After we put Nouriel you into agenda, my managers came to me and showed some of your tweets, which were very kind of emotional toward crypto exchanges and blockchain developers. And I get an idea of, wow, this will be kind of real test for our ideas, and we need to kind of test our anti-fragility. I was thinking to bring one more person who is also famous about potential risk for financial system, Nassim Taleb. Yeah. But it would be very, very too big push for us. So we feel ourselves like pioneers who try some undiscovered territory, and we need both strengths to kind of take these steps and feedback to take them into the right direction. And I have a video entertaining a bit. Which shows how some of the innovations come into our life. Kirill, could you show it, please?
Redskins, Dodo Heads, tepid lemonade. Get out of it. Redskins, Dodo Heads, tepid lemonade.
Hey, mate, I'll take 5 of your Redskins and one of those tepid lemonades.
It's one chicken, mate. It's not a chicken.
No, No, that's much better than a chicken, my friend. That is gold.
What?
Gold. The currency of the future.
Great. Come back in the future. Ratskins.
But no, mate, I don't think you understand. This has unlimited use.
Can I eat it?
No.
Can I wear it?
No.
Can I use it as firewood?
No.
It's starting to sound pretty limited, mate.
But you can melt it and then turn it into whatever you want.
Can I turn it into food?
No, you can't
Sorry,
eat it.
is this going to take long?
Hold on your horses, mate. We are dealing in futures here.
Oh, what's that? Is that a rock?
No, worse. It's cold.
Oh, cold. How do I get some cold?
Gold. I have people mining for it.
Oh, you have people. La-dee-da. We got a rich one here, eh? What do you pay them with?
Gold.
Next.
No, they say that this currency could be worth 1,000 ratskins, maybe even more, in just a few years.
Says who?
The people with gold.
Fuck. Next.
Look, every economy ever has been controlled by the big chicken banks.
Next.
And this is our opportunity to get out from under the big chicken boots,
Fuck me.
shake up the market, and start taking back our economic independence. Are you with me?
No.
Really? Come on, man. Look, all my mates are doing it.
I'll just get your hand off it, all right? Everyone's trying to predict the next alt rock. First it was stone, then bronze, then iron, now gold. What can I even do with this shiny shit? Make fucking jewelry out of it or something?
Yes, you can do that. Great idea, because it's malleable. And best part of all, there's fuck all of it. It's a finite resource.
Mate, I'll tell you what a finite resource is. My fucking patience, all right? Now piss off.
You know what? Stuff it. I'm taking it back. It's like talking to my dad.
Yeah. Why don't you go discover avocado and smash it on toast, you dickhead?
Yeah, maybe I will.
Sorry, mate.
I'll have a dodo head, thanks.
Half a chicken. Piss on me, not you two.
Oh, no. This is way better than gold. It's silver, or as I like to call it, light gold cash. It's faster to mine. It's...
Got to be the last one, surely. Ratskins, dodo heads, very tepid lemonade. Get it here. Desert warm.
Okay, thanks. So sometimes innovators are beaters. Thank you. That's why I gathered so many people there to talk with Nuril. Okay, Nuril, that's your turn. I know that you kind of affected your leg. I hope this was not like accident which we showed this related to adoption of something new. Maybe some skin. Yeah. Oh, okay. Okay, so I'm passing word to you.
Okay. Good afternoon, everyone. Apologies, I'm going to have to sit down because I twisted the ankle, so I cannot stand. Hopefully, you can see me. And thanks very much to the folks organizing these events for inviting me, especially as I'm known as the #1 public critic of cryptocurrencies and blockchain and you name it. But I attend many of these conferences, and I find that people find useful to have a contrarian view to check their own hypotheses where they're going, and hopefully I can make a number of constructive remarks. And I'm not going to emphasize right now today, unquote, the critique of crypto or blockchain, but I want to speak a little bit more about one, the future of financial services, two, what's going to happen to cash and the debate about central bank digital currencies and how that's going to affect also the structure of banking, lending, and of financial services. But of course, I'll start my remark by making the point that, you know, in my recent US banking Senate testimony, 40-page piece, I said that cryptocurrencies were the mother and father of all bubbles, now gone bust, and that blockchain, in my view, was the most overhyped technology ever, and provocatively I said, no better than an Excel spreadsheet or a database. And maybe in some of my remarks, some of this critique will come out. But, you know, the first observation I'll make is that, as you well know, from the peak of early last year, even Bitcoin has fallen almost 85%. Thousands of other, call them altcoins or whatever you want to call them, have lost between 95 and 99% of their value. And even if you take the top 10 cryptocurrencies, including Bitcoin, from the peak have lost 90 to 95% of their value. So the view that this was a bubble gone bust has been proven right. Of course, supporter Bitcoin say, we've seen this kind of a downturn in the past and 90% plus corrections, and then prices are going to go higher. I'm not going to discuss why I think that's a false view, but certainly the landscape this year is different than it was about a year ago. The other general remark I'll make on blockchain is that right now, given what's happened to cryptocurrencies, everybody is speaking about how blockchain can change not just finance, but also business, supply chains, and you name it. And there's a lot of talk about corporate DLT. But my sense of all this space is that if you scratch the surface of what people call corporate DLT or blockchain, it's not really blockchain. I mean, everything that's been done in the private sector where there is the IBMs of the world as opposed to the consultant is not public, is private, is not permissionless, is permissioned, is not based on a trustless system of verification, but trusted authorities, is not decentralized, it's centralized. And therefore, it's a blockchain only, in name only, but in substance, it's effectively a fancy database. So I'm not sure even why people call it a DLT or blockchain. And in my view, there's not going to be any corporation or business or non-profit is going to put on a public, distributed, permissionless database that is distributed, all his P&L, all his balance sheets, all the relation with supplier, customer, and so on. There is no economic reason for doing so. There is no reason to put it on hundreds of thousands of different ledgers when you can have a nice centralized one that is permission and so on. So I'm skeptical again about corporate DLT, but maybe we can discuss that. Now I want to more center my attention on the future of currencies and what's going to be the future of financial services. And first observation I'll make is there are many problems with traditional financial systems and what people call legacy banking system. I was one of the biggest critics of banks, and I wrote in advance about why we'll have a global financial crisis, and I wrote a whole book criticizing the banking system. So I'm not beholden to legacy banks. And I do believe there is going to be a revolution in financial services, and that revolution is called fintech. But my reading of fintech is that it has absolutely nothing to do with blockchain and nothing to do with crypto. Effectively, if you're thinking about fintech, is a combination of, on one side, artificial intelligence / machine learning, 2, big data and using them with these algorithms, 3, Internet of Things and sensors and you name it. And this combination of things is going to be revolutionizing and is already revolutionizing everything from payment system, credit allocation, insurance, asset management, and a variety of capital market services that financial institutions are providing. And if you think about it, even just that payment system, as you know, any crypto payment system is a problem that Vitalik Buterin referred to as the inconsistent trinity, that you cannot have at the same time something that is scalable, that is decentralized, and is secure. And in the case of Bitcoin, you can do only 5 transactions per second. Visa allows you to do already 25,000 transactions per second. But the reality, there are already right now a wide range of digital payment systems that do billions of transactions a day, and they're used by billions of people. In China, you have Alipay and WeChat Pay. In India, you have this UPI-based digital payment system. In Africa and Kenya, you have M-Pesa. In the United States, of course, you have PayPal, Venmo, Square, you name it. So if you're thinking about doing on a scalable basis and in a secure way payment system, there is already plenty of stuff that massively scalable, is not decentralized, centralized, but is secure by any dimension, who does the job. And we're speaking about digital payment system. So you don't need crypto for any of that stuff, leaving alone that most of cryptocurrencies are not currencies because they're not unit of account, they're not a means of payment, they're not a stable store of value. So payment system already being revolutionized by fintech, and I could describe in much more detail how credit allocation, insurance, asset management, and so on is also going to be revolutionized by fintech. So I believe in massive financial innovation and disruption, but all this fintech has zero to do with blockchain or with crypto. The other observation I'll make is that, of course, a number of central banks around the world, and I talked to many of them, and I talked to the IMF, are talking today about creating central bank digital currencies. And whenever a crypto publication hears about it, they get excited and say, you see, even central banks are going to create their own cryptocurrencies. And I think there's a massive amount of confusion because when central bank call about central bank digital currency or CBDC, again, those things are never going to have anything to do with either cryptocurrencies or with blockchain. First point is important here is that, of course, cash is being used less and less around the world. And there are some societies like Sweden or China where cash is almost disappeared. You know, even beggars in the street, a few of them you see in Stockholm or Beijing, they're using, you know, a mobile app on their cell phone, and then you can transfer money to them if you want to give them money. So definitely cash is going to be disappearing. And secondly, as I pointed out, there are already these digital payment systems that are alternative to cash, even if most of them are still embedded in legacy banking system. Most of them, not all of them, Alipay and WeChat Pay can be taught as, in part, things that are unrelated to you needing to have a bank account. With Venmo, with PayPal, you still need to have, in the background, a bank account. But as I pointed out, these new digital payment systems that are totally digital, already doing billions of transactions done by billions of people. Now, what's the issue with central bank digital currencies? Today, our current payment system is as follows. If you are a commercial bank, you have access to the balance sheet of a central bank. So you have an account, and it's a digital account, and you can use this balance sheet of the central bank to do transaction with the central bank and do transaction with all the other banks in the system. So the entire system of interbank transaction goes through a centralized ledger in the central bank. And therefore, everything that's interbank occurs through those kind of things. And the Fed funds rate in the US is the interest rate at which these things get done. The reality, however, is that apart from commercial banks that have access to the balance sheet of a central bank, everybody else in the economy, individuals, households, corporations, but also non-bank financial institutions, do not have access to the balance sheet of the central bank. And therefore, whenever they have to do payment transaction, how to do the payment transaction? They do them using private banks. And private banks essentially effectively create money when they make a loan to you. They create a deposit for you, or you can put money in the banking system and using the private banking system essentially to do transactions. And of course, there are some transaction costs involved in it and so on. So people use the bank account, they use wiring system, they use checks, or if you're using PayPal, Venmo, Square, and other system of this sort, effectively you are in the background having your own bank account that is linked then to this digital payment system. Now, it's not a very efficient system and implies some costly transaction costs, even if those transaction costs have fallen over time. Now, suppose you create a central bank digital currency. Effectively, what does it mean? Is it a cryptocurrency? No. Is it based on blockchain? No. Is it based on DLT and is distributed? No. It's like the current system. It's a centralized ledger where all transactions occur. is totally monitored by the central bank, is private, is not permissionless, and so on, is restricted. But then suppose that every individual had also an account with the central bank, and therefore you had access to the balance sheet of the central bank the same way Citibank or JP Morgan or any other commercial bank does. Then you would not need to have a bank account. You would not need to use checks or use wire transfers or any deposit system, because you can use the balance sheet of the bank. So if I have to give you money, I can do it by transferring through the balance sheet of the central bank some money from my balance sheet to your balance sheet, to my account, to the other one, the same way the banks do in the interbank banking system. So when central banks are thinking about the central bank digital currency, they're thinking about a centralized system with a single ledger that expands that the balance sheet is available to every bank today, to every individual in the economy. And of course, if and when that were to occur, it will be a completely efficient system, will be almost virtually costless, will be safe, is guaranteed by the central bank, will reduce a lot of the transaction cost. But think about the implication of a central bank creating a central bank digital currency. It will dominate, first of all, any cryptocurrencies. There's no reason why anybody should do any payment with a cryptocurrency. It would also dominate the current digital payment systems, the various Venmos, PayPals, and so on of the world, because why should you use those ones and pay even a small fee when you can do it for free with a central bank? And of course, it will also dominate the deposits that the individuals have in the private commercial banks, because why to have a deposit when you can do payments essentially using your free bank account with the central bank? So if and when, let me finish and then we can have any question and so on and have a discussion. So if and when any central bank in the world is going to decide to have a central bank digital currency in this centralized way, it's going to dominate every cryptocurrencies, it's going to dominate the current system of deposits in private banks, and it's going to also dominate the current various models, and there are different ones around the world, of digital payment system. In my view, it will be actually a revolution that makes actually any type of payment system much more efficient, zero cost, secure, and so on and so on. Now, some people argue, people will still want to use, unquote, cryptocurrencies, because with cryptocurrencies you have anonymity, while if you have a central bank digital currency, big brother central bank is going to monitor everything you do. I think that that argument is incorrect in a number of dimensions. First dimension, which is incorrect, as you know, Bitcoin is not really private. If law enforcement, actually authority, want to go after you, they prefer actually, if you do your illegal transaction with Bitcoin, they're much more easy to track and catch you than with private banks. And there are some alternative cryptocurrencies that are supposed to be fully, unquote, private, but I speak with central banks, and there is no central bank in the world is going to ever allow a Monero of the world and so on to having totally private transactions where any criminal, any terrorist, any tax evader can essentially have purely private transaction. That's never going to happen. They're going to find plenty of ways, and I'm not going to discuss them, in which that action cannot occur. Second observation, this central bank digital currency doesn't have to be public in the sense of the central bank having access to every transaction you have. Today, if you get audited by a tax authority, they have the right through a law enforcement agency to go and say, show me your bank accounts. And under good cause in a democracy, you have to show all your bank accounts. So even your bank accounts are not private. So if and when there is a central bank digital currency, the standard is, unquote, privacy and anonymity. But if the government thinks that I'm evading my taxes, they can go to a law enforcement authority and say, sorry, you have to show which transaction you were doing with the central bank by being payment system, because we have to monitor whether you declare your income, assets, and so on. So this idea that you'll have Big Brother that is watching you and is going to monitor everything you do, and therefore nobody's going to want to use this system, is false. Even today, you don't have privacy. If a true law enforcement authority wants to look at your private financial bank account, the same thing is going to happen with a central bank digital currency. So you can have the default being privacy and then when needed and according to law, your account being monitored and audited as needed by law enforcement. So I don't think that that's going to be a problem and anybody is going to worry about it. However, if you think about the consequences of on the financial system of having a central bank digital currency, then it completely changes the nature of the banking system, because today the banking system is based on a fractional reserve banking system where the banks have only a small amount of their assets that are essentially cash or cash-like instruments, reserves or excess reserves. And whenever they make a loan, they create effectively money and deposits. And therefore you have essentially only a fraction of the liability of the banking system, say deposits are backed by liquid assets. And that's how you make, with fractional banking system, multiplication of loans. Now, suppose you have a central bank digital currency, what's going to happen? That's going to dominate any deposits in the banking system, because anybody with a deposit in the banking system is going to essentially move their money to their own account with the central bank. And then the question becomes how banks are going to be financing their lending. Effectively, the solution, or at least one of them, is the following one. Instead of having a fractional reserve banking system, you create, like has been proposed in the past, a narrow banking system where payment systems are fully backed, like they would be in a narrow banking system. But instead of having many private narrow banks, there is only one. There is the central bank that provides the payment system. And then if private banks want to lend you money for business activity, for mortgages, they have to borrow long-term with long-term borrowing from savers to make long-term, essentially, lending and investments. And that actually resolves many problems, because today, with a fractional reserve banking system, you have a maturity transformation. Most of the deposits are short-term. Most of the assets of the banks are long-term. And if there's a bank run, then there's a risk of a run on the banking system. Because of that, you need the deposit insurance. Because of that, you need a lender of last resort, but that creates moral hazard. And once you have moral hazard, then you have to have supervision and regulation of the banking system. You create lots of things. If you have a narrow bank, you resolve the issue of the payment system. And if you have instead financial institutions that borrow long-term and make long-term lending, there is no maturity mismatch, and the risk of bank runs and other problems have to do with moral hazard is significantly reduced. Now, that's, however, it's a revolution, because it means essentially traditional banks disappear, because nobody's going to have a deposit with the banking system. Now, an alternative solution to that problem is to say, we're going to avoid this intermediation of the private bank. So all the money that goes into the central bank account from the private deposit is going to be lent back by the central bank to the private banks. And therefore, these private banks can use these central bank deposits to make lending decisions like today. So you don't get the disintermediation. But of course, you get a situation in which the only depositor in the banking private banks is one, the central bank, as opposed to millions of private depositors. And then people worry about the potential for government interfering into your lending decision, right? You know, Big Brother is going to tell you who to lend to you, and so on and so on. So that might be a problem if you don't want to go to narrow banking. The third solution is the one that has been suggested by Christine Lagarde at the IMF. It says we can have the current system with some private and public partnership. Your deposits are still with the private banks, but the whole settlement occurs through this digital system that's intermediated by the central bank. So effectively, you have access to the central bank balance sheet as an individual through essentially your private bank, but you avoid all the inefficiency cost of transaction costs that exist today. You still have a fractional reserve banking system then, and the problems of potential bank runs or moral hazard, and you name it, remain. But that might be a solution that doesn't go to the extreme of having narrow banking on one side or Big Brother lending everything to the private sector on the other side. So the gist of it, in my view, is that one, we're going to have a revolution in financial services. It's fintech, and as I pointed out, has nothing to do with crypto or blockchain. Two, that eventually cash is going to disappear. And actually, that implies interesting things also for monetary policy, like the ability of central banks to go even more negative with policy rates when it's needed, like in a severe economic recession. 3, that these central bank digital currencies are not going to have anything to do. And if you speak to any central bank, none of them is going to do it by a distributed ledger. It doesn't make any sense. None of them is going to do it. So it's going to be a centralized system like the current one that they deal with the banks. And 4, that more importantly, it has massive implication for the structure of our current fractional reserve banking system. And it might radically change the nature of that towards narrow banking and loanable fund financial institutions. And if you don't want to do that, then you have to think about creative alternatives. So that's the debate that is occurring among central bank, and it's an important one, but has nothing to do with crypto and has nothing to do with blockchain. So that's my take on what's the future of digital cash, what's the future of financial intermediation, and what's the future of banking system. Maybe I can stop here.
Thanks a lot. Just to summarize, so you think that central banks can serve directly customers, right? They open accounts for customers on their balance sheet rather than on balance sheets of banks, right? And manage these accounts with the central bank bureaucracies.
Well, you know, currently already, as I said, the system is one in which every commercial bank has access to the balance sheet of the central bank. And there is no reason why this balance sheet should not be available to every individual or corporation in the system. And the fact that this not implies that payment system occur through traditional banks. But if and when a central bank digital currency is created, by definition, that's going to dominate on any dimension of cost, efficiency, speed, security, any private deposit in the banking system. So they'll be crowded out by definition, private deposits, cryptocurrencies, and even digital banking system, digital payment systems. That's the nature of it.
Okay, thank you.
First of all, I want to compliment you. In a short lecture, you touched all the major central issues. Really very well structured. Now, one remark that I had in the middle, but then you clarified it as you went along, and I'm glad that you didn't let me interrupt you, is that, you know, issuing a central bank digital currency does not necessarily mean that you have to open the access of opening of having a deposit at the central bank by the non-banking public. Okay, and you're well aware of that, and actually your proposals actually show that. But then, and I agree with you that the most efficient arrangement is really to go to a 100, you know, basically reserves banking system, narrow banking, the idea of narrow banking from the 70, 100 years ago or so. And that would be, you know, the most efficient thing. It would dominate everything. It would cast, and it would actually bring all the benefits of the fintech revolution into the payment system. That would be the best thing. But it would destroy completely, you know, the banking system as we know it today. Now, so this brings us to the issue. It seems, you know, so this is, I think, from an economic welfare point of view, the first best solution. And I think we agree on that completely. I think the difficulty is that there is the political economy of that is achieving, you know, moving from a fractional system that we have today to a narrow banking system of the type that you are, that is the most efficient one, would seem, really demands basically, like you say, a revolution. And a revolution, and the main first victims of this revolution are going to be the banks. And we know, as you well know, that they have tremendous clout in the United States. They finance basically more than half of the contributions of the Senate, of the Congress, of the President, etc., etc. Do you think that this has any chance of flying, or this is just a dream?
Well, it's an important point, and you're correctly suggesting the political economy might not lead us soon there. But I remember, was it last year, that in Switzerland, there was a referendum about creating a central bank digital currency and effectively moving towards a narrow banking system, was defeated. I'm not sure by exactly which margin. But, you know, this idea gonna come out, and it takes one country to do it. Take about the issue about inflation targeting, right? It was an idea, and eventually, what was it? New Zealand was the first one to do it. It worked. Then slowly, Australia, UK, US, ECB, everybody's doing it. So if it's a good idea and one country tries it, eventually people realize if we're going to stop, you know, bank runs, if we're going to stop credit boom and bust, if we're going to stop moral hazard, if we're going to stop the need for excessive regulation and supervision that often doesn't work, maybe there is a system that's going to be more efficient. I don't expect it to occur anytime soon, but I do believe that since there is a pressure coming from cash slowly disappearing, in most countries, the idea of having a central bank digital currency is appealing. Now, as I pointed out, in one extreme case, you go to narrow banking. In another case, you just recycle those funds and you lend them back to the banks. Some people worry about the ghost plan and therefore effectively the government telling the banks how to lend money. You could have a rule that says we recycle all this money and then you lend it as you wish. That could be one way of avoiding that disintermediation. Or there is the Lagarde solution that says, you keep the current system with the deposits, but then the entire settlement occurs effectively as if you as an individual had an account with the central bank. So you get all the low-cost efficiency of instantaneous transaction without the disintermediation of the banking system. And maybe you're going to start with a Lagarde solution or other ones before you go to full narrow banking and a system of loanable funds, financial institutions. They'll be the first best, according to most economists. So, lots of things are going to happen, and it takes one country to try it, and then you'll see what works. If it works, then it's going to become contagious in a positive sense. So I don't expect it to happen overnight, but there is a significant debate. And if you're thinking also about, for example, the whole debate about banking the unbanked and making sure that the poor of the world have access to easy payment systems, for lots of reasons we can debate. I don't think it's going to happen with crypto. But if everybody, and already in Africa, everybody has a smartphone or a simple phone, and everybody has access to the balance sheet of the central bank, you're already creating a system where all the payments can occur at zero cost by a central bank digital currency, and you can layer on it then micropayments and lending and whatever not. So there is a great appeal of doing something like this, especially in countries in which brick and mortar banks are very expensive. That's why nobody uses brick and mortar banks in Kenya, and everybody's using already M-Pesa. So M-Pesa is a private version of this idea of a central bank digital currency. You could make it public, for example. Eventually, I think it's going to become public. Yeah. They're private, but in China, they're effectively controlled by the government, Alipay and WeChat and all these big internet companies. And if they become large enough and they can have systemic effect, effectively, right now they don't need the banking license like M-Pesa and others. But eventually, either you make them public or they are a public private monopoly that is a utility and is regulated accordingly. But it doesn't matter the exact configuration of it. But you can have a very efficient payment system that is, again, is not decentralized, is not based on DLT, is not based on blockchain. It has all the benefits and efficiency of a centralized single ledger. It's secure and it's costless, and you name it.
But this payment system, they can't print money, right? They use existing money. And in case if the same body, which can print money, also manage accounts of customers, it's a big change in checks and balances. Yeah, with this system, the company which wants to get loan, it went through bank where there are shareholders and regulator checking its capital. And if it come directly to central bank and ask to put some money into his account, then what is the kind of checks and balance against this? There's such a big conflict with this.
Now, first of all, I would separate payment systems from credit allocation. In this system, the credit decisions are made by a private financial institution who borrow long-term and lend according to good criteria without maturity mismatches and other moral hazards to the private sector. You reduce the risk of credit boom and bust, first of all. Secondly, you can still have central banking monetary policy activities, because if there is an economic downturn for any reason, like today, you know, the central bank does open market operation with the private banks, and you can do open market operation also using this centralized system with private banks, or you can do it actually even with private individuals. You know, in the last financial crisis, QE was buying the bonds that the banks were holding, but why can't we do QE directly with the household sector? You know, I buy some of your bonds or other assets, and I'm going to give you cash. So it might make actually transmission of monetary policy in an economic downturn more efficient. So you can do still counter-cyclical monetary policy by using this centralized system that everybody has access to. And then the credit decisions of the banks are subject to less distortion, because you don't have the maturity mismatches. You cannot create money with all the moral hazard that created money whenever you have a loan creates. But then you still may have to monitor what they do. I mean, of course, there may be credit policy decisions that might have to be fine-tuned in terms of what the banks do. They might have to have, again, some minimal liquidity requirements of one sort to avoid some excesses of credit that might occur even in a loanable fund system. So you know, it's a very different financial system, but you can do monetary policy, you can do credit policy, you can do lots of different things.
Oh, interesting. So bank prints money and decide which of these millions accounts will receive this money, which not. It's a very complex process. Yes, please.
I'm sympathetic with the ideas that you're outlining, but I would like to mention an exception. We know that for each New Zealand, we have Zimbabwe. And in Latin America, we have other Zimbabwe's. So at the limit, presently, dollarization is the option open to Zimbabwe and the like. So there will be a residual demand for the old type of arrangements. And chances are that dollarization will continue to be the second best or the third best for the basket case of the global system. This may account maybe 5% of the present states, but definitely it's significant, potentially even more. The second, which is more minor, you are presuming that the internet will survive forever. Think about the big earthquake hitting San Francisco. Presently, we know that apparently the Fed will use helicopter operations of delivering cash in order to prevent the collapse of the market system. If it will take a month to restore maybe more the internet, so then again, we'll need IOU or quasi-cash delivered in similar ways. So otherwise, you're right, intellectually at the limit, it will work, but I never say never, because we know that Zimbabwe may perform better, but then another Zimbabwe will pop. And then you have the issue that some countries like China are using already credit scores that are going beyond what we are calling regular credit scores. And maybe dollarization will be a residual option, even for a country huge as China. Because I'm not sure had I been in China that I'll be delighted to be part of the system, and dollarization de facto may be a way to avoid it. Thank you.
Yeah, on your points, I'll make the following observation. They're valid ones. First of all, we rely on the internet for everything. We rely whether you have crypto, whether you have bank accounts, whether you have the a central bank transaction is all digital. If there is a disaster and everything shuts down, I don't know. You might have to really print money on the go. Otherwise, you go back to barter. But that doesn't depend on which kind of a banking or monetary system we have. We're dependent on something that may be subject to a systemic shock or not. So I don't think that, short of making an argument that we should have cash for that reason, that there is a solution to that particular problem. This argument that, some countries have high inflation, hyperinflation, the Venezuela, Zimbabwe of the world is true. And those countries don't have monetary credibility. As we know, they have effective dollarization. People use dollar cash or dollar bank accounts for transaction and so on. And that may remain. But first of all, some countries restrict the ability of individuals to have a foreign currency bank account. Some of them accept it as part of formal dollarization. But if you accept formal dollarization as an option, there is no reason then that instead of having a local bank that has, you have a dollar account, you cannot also, as a foreigner in Zimbabwe, access the balance sheet of the Fed and have, your bank account with the Fed actually is more secure and safe. And if it's a government is illegitimate enough, they're gonna essentially, with financial repression, want to take over your assets. Today they can do it, right? They can take over your dollar bank account like Argentina and convert them into, depreciated pesos like they did, a few years ago. They can expropriate your crypto account if they decide to do so, as long as they are on exchange. So, an expropriatory state can always do stuff that effectively wipes out your financial wealth, whether it's in dollar or local currency, through its own extortive and other types of expropriation power. That's a risk that you cannot effectively control. But I would say, if you want to allow more dollarization against risk of high inflation, then allow legally everybody to have an account also with the US central bank digital currency. That makes it actually less costly to deal with your own local banks. Now, in China, and that's a broader issue, not only you have a credit rating system that is based on your financial characteristics, but now Big Brother is one in which your access to credit depends also on how well behaved you are in society and so on. And that's a problem. And I think that some societies that are authoritarian are going to move in that direction. It's up to us in liberal democracies to make sure that that doesn't happen, even if there are delicate issues. I mean, support that then, even today, in US and UK, there are companies that offer to you, you can go online, apply for a loan, you give them access to all your bank accounts by checking a thing. And on top of all your P&L and balance sheet, they look also at 3,000 other sets of data regarding your Facebook, your personal data, and so on. In 60 seconds, they tell you how much you can borrow and which price. So they use pretty much AI and lots of other information to make a very targeted lending decision. Now, suppose that information has to do with your gender, with your race, with stuff that we usually don't want people to discriminate with, or in insurance, then it creates legal and moral issues that as a society we have to accept. Are we going to be willing to use big data and the granularity of big data to make decisions that are, in terms of insurance, lending, you name it, more efficient, but then they have some consequences that were not politically and morally acceptable? If we believe are not acceptable, then we'll have to regulate and say certain data cannot be used in making insurance or credit allocation decision. But that's a decision that democracy will have to do on their own, on what's acceptable and what is not acceptable in using big data.
That was a very interesting case about Zimbabwe dollarization. The problem here is that you would prefer to keep dollars in cash rather than to keep them in Zimbabwe bank, because there's still local banking system risk. Or you can use crypto exchange and kind of store USD tokens there, which are not exposed to. Yeah, internet is now accessible better than financial system. Okay.
Well, if I could make a point on that one, because yeah, even in Zimbabwe, everybody has a smartphone and they can create a crypto account. You know, as long as effectively that intermediation of crypto occurs with centralized exchanges, authoritarian expropriatory state can always go, first of all, to that exchange and say, give me all the information. And it can go and expropriate and tax your wealth, your assets, your income, or convert your crypto assets into this depreciated Zimbabwe dollar. So unless you have a completely decentralized system in which the state gives up this authority to be able to monitor what your income and assets are, and therefore you can just keep wealth virtually without any control, and there is no government going to accept that, neither benevolent ones nor non-benevolent ones, it doesn't matter. They can seize your crypto assets as much as they can seize anything else. You know, you have to register your account with the exchange, and all that stuff is monitorable and subject to taxation, expropriation, and you name it. So I don't think that unless you have something that's totally private that that is not monitored by anybody, but is not a system is going to be acceptable to any government, one in which you can essentially bypass any laws on money laundering, KYC, MAL, terrorism, criminal activity, and you name it, is not going to be acceptable to any government. That's why the idea of a purely private and 100% private cryptocurrency is not going to be acceptable by any jurisdiction. They're going to crack down on it for sure.
Yeah, first, I want to thank you for making it very clear that central bank digital currency is really a misnomer. It's a central bank retail account. It's not a currency in any way. But the argument that it's going to dominate everything seems to me a non sequitur. Central banks are very efficient at wholesale payments. Therefore, they are very efficient at retail payments. I don't think we know that. And you've said that if one country adopts this, we'll see a demonstration. One country has adopted this. Ecuador adopted a central bank digital currency in 2015. In 2018, they shut it down because it was a complete failure. Their front end was terrible. Their customer service was terrible. Their interaction with merchants was terrible. It never really got off the ground despite millions being spent to promote it. So I think it's an open question whether central banks have any comparative advantage at retail payments. That's what we need to find out. I think the Lagarde option that you mentioned is the least dangerous because it doesn't presume that we're all going to switch. But if we see whether people are willing to accept lower returns on their central bank retail account in order to get faster settlement, then it will have passed a market test. But I don't think we know yet.
You know, it's a fair point. I mean, it works smoothly with commercial banks, but those are a limited subset of them. I think that you can set up a system that is smooth and no cost, where everybody has an account with the central bank and can be done. You know, Ecuador is not exactly, you know, the most sophisticated country in the world. It might take a Switzerland or a New Zealand to try it first and do it right, and finding the technology that does it smoothly and all the rest. And if that happens, I would say it's going to dominate. I mean, today you get mostly zero on your checking bank accounts. And if you want to get a return, you have to lock in your money. But then in a narrow banking system, you can lend money to at 1 year maturity, 2 year maturity, 5 year maturity to a loanable fund financial institution is going to lend it to corporation for mortgages. And you're going to get your positive return. You know, it's a trade-off between pure cash and payment system that most of them are going to give you near zero return, and having alternatives that are having not 100% liquidity but have some maturity that can give you a return. And that trade-off is going to exist even if you have a central bank digital currency. It doesn't mean you cannot earn a return on your investments as long as they have a maturity more than zero. But by the way, the benefit of limiting cash from a central bank is that, last time around we went to zero, and then we did QE and quantitative easing and credit easing and forward guidance. And then some central banks went to negative policy rates, but the maximum was what, minus 75 basis points in Switzerland or in Sweden. Even ECB went only to minus 40. If that doesn't work and you have to go to -1 or -2, you have to essentially eliminate cash, and therefore banks cannot switch from excess reserves to to cash, and therefore you can go as negative as you need it. And it might be actually the way to do monetary policy in a great economic downturn if one of those occurs. So there is actually a very good case based on monetary policy on eliminating 100% cash so that the arbitrage between reserves and cash when you go very negative cannot occur. That's an argument for eliminating cash.
I would like to raise another question that has not been touched upon. And this is a question that we discussed on the bus with the advisor to the governor of the Central Bank of Canada. Where is he here? Because he really should have asked this question. So I'm proxying for him. Mark Carney, who used to be the governor of the Bank of Canada, opposes central bank digital currency on the ground that once the central bank issues digital currency and there is some sort of panic in the system, even the beginning of the panic or something like that, then the flight to safety is going to be much easier. You don't have to line up and all that, and particularly if you open the possibility of having all the individuals have bank accounts with the central bank, pushing a button on their iPhone or something like that are just going to move, all the funds into the central bank. Now, the danger of that, according to Mark Carney, is that this is going to lead banks, the private banking system, who might not be completely liquid because they will be still on the fractional reserve requirement, into fire sales, and may accentuate, may make the speed with which a system is going to sort of diverge into panic much quicker than under, let's say, the system that we are having today, and we saw happening in the United States about 10 years ago with Lehman and all that. What do you have to say to that?
If you have a central bank digital currency and it lives in parallel with still a significant amount of deposits in commercial banks, I can see how, if there is a true panic, that panic can accelerate. But of course, central banks already have, and they will still maintain in a system like that, one, deposit insurance, second, lend of last resort support. Three, of course, you can have extremes of bank holidays if everything else fails. So, if instantaneously there is a run on private bank, it takes a second for the central bank to lend back all that money back to the private bank, as long as the private bank is subject to a pure liquidity run and is illiquid but not insolvent. And that system exists today and would exist even in the future with existence of a central bank digital currency. So you'll have to make sure that you know whether the bank is illiquid, whether the bank is insolvent, but it takes one click to lend every penny that comes out of the bank to the central bank back to the private bank, if such a type of run were to occur. You have to make a decision, you have to make them quite fast. My view is that if eventually most of the payment system occur effectively through narrow banking, the whole reason why we have bank runs is because we have a fractional reserve banking system. And once you have a narrow bank, but instead of being private banks have narrow banks backed by treasury bills, you have it all in the central bank. There is no possibility of a banking run on payment systems. With the definition, everything is central bank and is backed by the fate of the central bank or backed by the T-bills of the government. So you avoid that problem altogether to begin with, and you avoid the problems of runs and moral hazard and regulation supervision that come from a fractional reserve banking system. So it's a legitimate concern, but it can be resolved like it's resolved today through lend of last resort support and deposit insurance and all the other sets of tools that banks deal with bank runs.
So if there is no bank run, so how do we know that bank is managed poorly?
I have a different question. So if you implement a digital central bank currency, are you also going to found an institution that's going to monitor the central bank? Because you will give monopoly power to the central bank in monitoring the payment streams of basically all depositors in that particular country. And you will take away the opportunity to pay with cash. So is there anything that you plan to implement?
Well, you know, I mean, you have a monopoly as long as the central bank is benevolent, and Western economies right now have central banks that, through their own independence, to their own activity, have shown that they can maintain, you know, low inflation, not to create excesses of one sort or another. Is going to be as credible as good, credible central banks. The alternative, as I said, is the current system where private banks can create money through fractional reserve banking system, but you have a maturity mismatch, you have a risk of bank runs, you have a moral hazard, you have excessive lending and credit creation by the banks who can create essentially money at will whenever they give you a loan. Therefore, that leads to supervision and regulation that, as we know, doesn't work very well, and it's causing all the problems we've seen for the last 200 years with fractional reserve banks and bank runs and credit boom and bust and all those excesses. That's why some people, and there's a good theoretical argument of saying, let's have narrow banking and let's have a system of loanable funds where there is no maturity mismatch, and we're avoiding some of the excesses of the current system. But instead of being private banks, we're going to do the narrow banking. It's going to be just one central bank doing it, and it can work. You know, of course, the proof is in the pudding. But as I said, eventually one country is going to try it, and if it works better than the alternative, slowly, in spite of the political and lobbying power of banks, we're going to move somewhere else over time. Again, it's not going to happen overnight.
So, but what would be the case on this? So what we probably have is that there's competition between private banks. Private banks are watching the payment streams, and the central bank can decide to extend the monetary base. But there's competition between private banks, and the competition also disciplines private banks. As soon as you go to having deposits in the central bank as a monopolist.
First of all, the competition in the provision of all financial services but payment will remain. Lending decision, mortgage, insurance, asset management, capital market activities, and everything under the sun. The argument is there is a potential benefit of public utility of having a payment system that is smoothless, low cost, with a centralized system where these things can occur costlessly and without all the risk that we exist in a fractional reserve banking system. So pretty much 100% or 99% of financial services can be provided by private competitive financial institutions. There is one of them that is a payment system that might be benefiting from having a monopoly. But it's the only one. Everything else is upside up, including earning interest on your essentially savings accounts, right? You know, all that stuff is going to be private banks. It's only if you have just purely deposit account cash with zero maturity, that's going to be a central bank digital currency. Everything else is going to be private.
I just want to follow up on this, Nouriel. So it's very compelling, but I think back, as you know, even in the history of the Fed, there have been times when the political economy forces on the independence of the Fed have operated to constrain the independence. And there always is a desire among other political authorities to consider moments in time when influencing the central bank is a useful thing to do. So I think it is a bit disturbing to think about. So suppose New Zealand does this, and suppose right now the New Zealand central bank is very independent, very efficient. It does it very well. Can we predict with certainty over a 50-year period that somehow or other the central bank of New Zealand will remain independent of political control? So I think the question is actually an important question to think about, because it really would give, it's a huge amount of additional centralization at the central bank. And when the central bank is doing its job independently and relative to macro stability and transactions efficiency and all that stuff, it's acting like a good central bank, not like a Zimbabwe central bank, then this is a great system. But aren't you a little worried that somehow or other, even a strong institution right now, like the Fed or the New Zealand Central Bank, could be weakened over time by the surrounding politics of the nation? I do worry a little bit about that. I like the solution, but I worry.
Well, as you know, today central bank can be and are influenced by politics.
Yes.
And sometimes political pressure can lead them to increase base money and then cause eventually inflation more than otherwise. And that exists in the current system and will exist as a system in which all payment systems occur through the central bank. Today and during the global financial crisis, central banks, once they reached the zero policy rate, they had to go unconventional because otherwise the Great Recession would become Great Depression. First forward guidance, then quantitative easing and buying public assets at long-term maturity, then credit easing by buying private bonds, RMBSs, equities, corporate bonds, you name it, then negative policy rates and the whole gamut. And most of economists believe that actually if we had not done that, the Great Recession would have become Great Depression 2.0.
Completely agree.
So all those things can happen. So if you have a system, the way I set it, that you can do all the things you can do today. I don't think you can do more. And actually, part of the financial intermediation that is subject through the credit multiplier to the monetary policy affecting actually credit decision of the banks is going to be partly decoupled. You still probably could have a credit policy and regulatory policy that says that these private financial institutions should be subject to some liquidity requirement or you name it, that allows then central bank to do either benevolent supervision regulation and credit policy or malevolent like today.
Right.
So I don't think that
you don't think it changes,
the system changes radically the fact that
Okay.
there is this political distortion both in monetary policy and in supervision and regulation. And if anything, some of them will be reduced, especially if you don't create runs that create the need for deposit insurance and lender asset support, that then creates moral hazard, that then creates a need for imperfect supervision regulation. That is the current system. An alternative might be better one, might not be better, but it may not be much worse than it is the current system.
Just one follow-up, because so in this narrow bank world where all of the transactions of individuals would go through the central bank over time will have massive amounts of information directly about every individual, which is currently being put together in the private banking system. And you pointed out in fintech, that's already happened to a significant extent. I guess the concern that I might have, and that's why I asked you to address it, is all the things you said about the central bank being responsible and its instruments right now, and relative to political pressure, I agree with. But suppose a central bank, is sitting essentially on information about every transaction going on in the economy. And suppose the political system changes in such a way that it's a populist regime with a certain set of agenda, and they want that information, and they can put pressure on the central bank to give that information to the authorities. So that I'm concerned about that kind of thing, where the central bank has a huge amount of information it doesn't currently have, and then the politics around it change, and then they're put under pressure to use that information in ways which serve the current political agenda, not the central bank agenda, but the current political agenda. But
if you have that non-benevolent populist regime or government in power, even in the current system, the rule should be that if a legitimate law enforcement authority has to access to your financial information, then under only that condition, you have no privacy, whether it's a private bank's money or central bank. If it's not benevolent, there are plenty of populist government can go to tell the banks, you have to show me every transaction, every individual and what they're doing, and then they can use you, they can prosecute you, they can tax you, they can expropriate you, they can convert it like Argentina, every dollar account you had into depreciated peso. So, you know, non-benevolent actors that are in power can do lots of stuff that is ugly, regardless of whether you have a central bank digital currency. And I don't think that's going to change.
Okay.
In the case of a central bank digital currency, they can still go after all your private accounts and do whatever they want to, unfortunately.
That's true.
Sergey Gurev, please.
Yeah, I'll start. So you talked about negative interest rates. I think it's indeed becoming easier if you don't have cash to hold on to. But people can still hold real assets, right? So if you want to go not just 75 basis points negative, but I don't know, 3%, then people would say, okay, I'll buy real assets like this gold or skins or whatever durable goods and just hold on to them. So there is still a limit. Of course, it's less efficient to hold skins than paper cash, but still there is a limit of how much you can go negative.
No, yes, in the sense that people can try to convert their, you know, liquid reserves into real assets that protect them against inflation the way they do right now, but in a system in which the monetary base is set by the central bank, that hot potato has to be held by somebody. So if I sold my bank balances or cash balances to somebody else because I'm going real assets, somebody else at the right price will have to hold them. So effectively, the base money, like the current system through open market operation, can be set by the central bank. And the central bank also, through its own policy, can force banks to have additional liquid reserves of one sort or another. And once there is a certain amount of base money in circulation, if there is no cash, you can tax it at -1, -2, -5, even -10. I mean, you can do whatever you want to. It might not be eventually efficient. There are other collateral costs in terms of how much then banks have an incentive to lend money, because at very negative interest rates, it might become counterproductive on the net interest margins of the banks and on their profitability and their willingness to lend as opposed to not to. So there are other things can happen, but you know, you can tax at whatever level you want that existing liquid monetary base. So it's a hot potato that somebody in equilibrium has to hold. Therefore, you can tax it for as much as you like.
So, by the way, just turning a bit back, how many people should work in this central bank to manage 500 million accounts?
You know, you can think of a system that is very computer-based, that is very sophisticated, that is AI-driven, and so on, in which it doesn't take much money. I mean, right now we have in every bank tons of people that have to manage your money, your deposit accounts, your cash balances, tons of brick-and-mortar banks that are a waste of stuff. You know, certainly it's going to be less costly than having hundreds of thousands of bank employees managing the payment systems for the current system. It's going to be certainly more efficient, and there'll be significant economies of scale involved in it compared to the current system.
Mr. Rubini, I've been a fund manager and asset manager for many years, and in the past, I took your advice, and I was lucky. However, now I disagree with you. Do you believe there can be a centralized administration in the world? A government that brings together US, Russia, and China, for example?
I don't believe, but why?
Do you believe it can be a centralized central bank in the world? Centralized banks serve purposes, and they have vested benefits and policies. That's why they exist where they exist. Bringing them together seems to be nearly impossible unless the administration comes together as well. So at the same time, now I'll put the food for thought. The last 10 years, we've seen companies that grew larger than other companies that took them a century. What about if it was a centralized, a universal, let's say currency, I don't know if the term is the appropriate, that will take the world, is sweep the floor, because it becomes acceptable by the users, not by those sitting at the top. And I think this is what is going to happen, that the button has been pressed. The point is, are we finding the right solution? And more likely, the central banks will come to work with an entrepreneurial schema like this, rather than go after them. because it's for their own vested benefit. What do you think?
Well, first observation I'll make is the following one. You know, if you have a system of central bank digital currencies, you have the current system in which different countries have their own fiat currency, and instead of having cash, you're going to make it all digital. So you still have a dollar, the euro, the yen, even small currencies that may or may not need to exist. I mean, do we need 200 currencies around the world? Probably not. That's why a subset of countries that were part of the European Union created the Eurozone and the Euro, and there are pros to it, and we know also the disadvantages of having a similar monetary policy for every country where their own business cycle might not be fully synchronized. So what's the optimal amount of currency in the world? Is it 200 or is it one? Probably it's not 200, but it's not also one, because you're not going to have a synchronized global economy where the same monetary policy is good for everybody. But that's a different debate on it. So we're not going to go to a world in which there's going to be a common global central bank that issues only one currency, and so on. You know, of course, the dream or the utopia of cryptocurrency is to create, unquote, something that could be a global payment system. But first of all, is not working, has not worked. As I said, all of these cryptocurrencies are neither a unit of account or a means of payment is scalable or a stable store of value. You know, they criticize central bank debasing fiat currencies through QE and you name it, but every other shitcoin that's been created for the last few years has created a multiple of what central bank have done with quantitative easing. Anybody could create something out of nowhere. So there was massive inflation of that stuff. No wonder that their value has fallen 99%. And by the way, you know, there are reasons why in an economy you cannot use too many multiple currencies, because otherwise you go back to barter. The idea that everything can be tokenized is crazy. It's crazy because if everything is tokenized, I have to use a token to buy a different token for every good and service, and therefore going back to barter, in which I don't have a common numeraire, so that I know what's the relative price of this bottle of water compared to this microphone. That's the benefit of a numeraire. In a world in which everything is tokenized, you don't know anymore what's the relative price of two goods. That's why this whole idea of tokenization is totally nonsense. You know, even the Flintstones, you know, that were, you know, Stone Age people, they had their own currency. They were using shells, but the shells was their own currency because those are the benefits of avoiding barter. In a world in which everything is tokenized, you are literally back to barter. So you are much worse than the Flintstones in terms of sophistication of your financial system. So people who talk about this stuff, everything is going to be tokenized, they don't even know what they're talking about, because in any economy, you have to have a numeraire. And you cannot have thousands of currencies for every goods and services. Otherwise, there is no numeraire and you're back to barter. Literally, you're back to barter. So people talk about stuff, you know, people who don't know anything about banking, anything about money, anything about finance, anything about central banks, and they think they can reinvent the entire financial system where they don't know anything and talk about nonsense. Really nonsense.
Together, we had a similar call. There's Stern, that's it. I know the banking system well. So, to be clear on the version on blockchain tech, what are the three tenets of money that you just about? What are the three tenets of money? Right, for the three times. So, that is number one. That's number two. Unit of account. Number three. Okay, so
stable store of value.
Stable store of value. Very good. So I completely created a shitcoin, okay, using development law in the US and any other country. Represents a unit of gold, going of gold. It is stable. As a matter of fact, it's significantly more stable than the US dollar reserve currency. 1 second. Okay, go back 40 years. Okay, let's take a look at several fiat currencies. Over the last 40 years, the Nigerian naira has lost almost 1% of its value to gold. The Indian rupee has lost 95%. The US dollar has lost 75% of sorry, euro, US dollar plus 50%. Even the Swiss franc, right, which is currently plus 15%. If it lost more than 15%, except up to 2000, it was backed by gold. So if you create a quote unquote shit coin, backed by gold, 100% up on demand, like the US dollar academically was, you would have money. Every tenant of the price. Plus, you have the ability to program it, run it through small contracts. You have the ability to have an independent autonomous bank. So, I am at a loss to see the logic behind slamming everything blockchain did.
Listen, what you're suggesting is a digital gold standard. We tried the gold standard; it worked for a while until it didn't work. The price of gold was a few years ago, 6 years ago, 2,000. Now it's closer to 1,000. So in 3 years, you can have the price of gold debased by 50% or more. You're subject to shocks in the supply of gold and the demand of gold that led to financial instability, that led to boom and bust, inflation and deflation. We tried the gold standard. It did not work. No one is going to go back to a digital gold standard. You can certainly suggest it, but it doesn't make any sense. Why should I need a stable, not only store of value, but also purchasing power over good. Something like gold that is worth 2,000 5 years ago and 1,000 today is not a stable purchasing power over any good. And there's no reason to use gold, I'm sorry to say.
Okay, sorry. So my quick comment that you can win an election because you have a kind of a presence and influence people and get control over this central bank, which holds information about hundreds of millions accounts, and there are millions of people working for you. You will, okay.
That variation is best for the US dollar. So if you're going to knock gold standard for gold, then you're not going to use currency.
Not true. You know, in the last decade, the value of the US dollar as a purchasing power over goods, that is what people care, has changed in less than 1% per year. So it's a very stable store of value and purchasing power over goods. And people, when they want to be paid in something, want to know that my real wages can buy these goods and services, and they cannot be wiped out by 20% overnight like Bitcoin, or they cannot be wiped out by 50% relative to gold, other things, over a period of time. That's why we need something that is stable. Of course, to have something stable, you have to have fiat currencies where credible central banks are committed to low inflation, so you don't debase your currencies by having high inflation. Otherwise, you create problems. But come on, I mean, this is not even a debate about cryptocurrency. You want to create a digital gold? Please create your digital gold.
Okay.
I tell you, nobody's going to use it.
Good.
By the way, every pseudo stable coin, and you're a variant of that, is going to collapse like every fixed rate regime collapses because there is no credible collateral behind it.
Great.
Come on, just
okay. Now I'm given to Alex.
Hold on. Let me say something. I just want to add something to this debate. I think that the argument between the two of you fundamentally. Yeah. Can you hear me now? I think the argument between the two of you has to do with what is the correct standard to measure stability in. You believe that the standard is gold. Rubini, myself, Joshua Eisenman, and all the macroeconomists here, and all the central bankers here believe it is some measure of the purchasing power of money over goods and services, because this is what the people care about. They don't care about gold. Let me finish. People don't care about gold. The Indians care about gold for ornaments, and some, and then 100 years ago, you filled your teeth with gold and you showed your teeth to show how wealthy you are, or something like that, okay? This is the use of gold. And they build, this is what's nice about gold. Hold on, let me finish. You had your take, let me finish. Let me finish. I was very patient with you yesterday. Now you're going to be patient with me. Okay? Good. Okay. Now.
Thank you. And now we are turning to the next panel, which is a very big contrast to this one. So this one was about the super centralization of central bank, which controls millions of accounts, perhaps billions, and has millions of employees. Maybe half of them are working to solve the double spending problem. Another half is working to solve the credit underwriting problem. And it's not clear who is regulating capital if it's in presence. And there is no bank run mechanism to show that all of this is working not well. And the next panel is about decentralized financial system with a question mark. So I invite the panelists, Alex Zuckerman, please. Who wants a break? Let's vote. Okay, who wants to continue? Okay, break. Break. Okay, this was a good model. There is a political force which can have a strong voice, helpful to control the bank. Да, но вы перехватываете. Я сейчас хочу на стола. Come up with our central bank the currency, but now for the even if the bank doesn't have a bank run, it can still go bankrupt simply because it runs out of money. So basically, in the narrow banking model, you borrow from the central bank, you lend to firms, and at some point you make mistakes, they don't pay back to you, and you run out of money. You don't need a bank run. Yeah, but bank run is a big indication there's something wrong with the but good banks also can have a bank run and go under. So it's actually it's an advantage of that system that good banks are surviving. Yeah, but if there's a big problem in this bank, who will know about this? There's no people who are making. No, it will not have cash. It will have no cash. See? It just runs out of profits and cash. It will have to repay the loan to hyperinflation. This will turn into hyperinflation. No, because central bank fully controls money supply. That cannot be. No, it's completely reasonable. But there are deposits and the loans are not paid back. Sure, there had been transactions. Central bank fully controls all the money supply. So it's like deposits. Well, there are no deposits with the commercial banks. No, there are retail deposits. With the central bank? Yes. Sure. The central bank can print money to deposit. Yeah, that's hyperinflation. No, because the central bank targets inflation, and so if they see that inflation is too high, they raise interest rate, or they so people print cash. Okay. Last 10 years. That's why all these experiments are failing. Yes, exactly. But the right blockchain will come and actually make it right. Blockchain for the transparency or take the middleman out. That's what on they're not they're online market share. But anyway, forget about market. Very good. One of the things I said, that's what I was asking. I said, I said, everything has been hacked. CIA, Equifax, money laundering, down to $234 billion, has been broken. And centralized control. We're 500 nowhere to allow the one thing is to manage 1,000 banks, central banks. Once you
got 500 million accounts. It is a centralized system. Firewall, you, whatever you will be hacked. Bitcoin has been around for 10 years. And not one transaction has been hacked. Yeah, that's all we need. Swift just announced. Swift just announced that they were hacked and that transactions passed through the Swift network that were not initiated by any one of the banks. So what we're doing is we're going into a world that's more and more digital, more and more interconnected, and more easily hacked. And I don't understand why they don't decentralized system.
It's very good. Remind me. Especially with the case of Swiss card.
You know?
It's very good.
Swift being hacked.
How many money for the
I think it was 40 transactions or 50 transactions, but they were testing it to see if it would go through. They found it. But
and they reversed it.
And they reversed it. But again, what's saying is what Bitcoin, I'm not saying Bitcoin, what I'm saying is a decentralized system with multiple independent nodes is definitely a secure system where you get something of value. And I see, and where we're going is towards a worldwide. And you know what I saw that? When Russia tried to sell the transaction did not go through the US, and it was so when you're that's where Germany has said that they want to get off when you remember the gold standard, at the same time you had the silver standard in the 1914. Changed. Everybody going into the gold standard in the 1900s. It went up to 1850. What changed that and eliminated the value of silver was when Germany left with the silver and went with gold. And the countries who were the countries kept it, Russia kept it, and I believe it was China kept it. And their currency was globally devalued. But what tipped the scale was Germany. So I think those are things that they're not seeing that the changes that are happening beyond the borders of the central bank. It's not Bitcoin, but it's something like Bitcoin. That's mined globally and that's independent. Because the Russians are not going to do something right now. So all of you, the US projects, the whole world, send them all their and that's the currency back. And now $dollars instead of gold because it was back $25 every ounce of gold. Blockchain. And they convinced the Germans in 1982 went to the Federal Reserve and demanded that their gold centralized those are the decentralized that was astronomical. They sent military frigates and they every transaction gold and money back to Germany. So I think these are companies that people are necessary. That we're going into a higher digitalized world where everything's Equifax. 150 million Americans that all of their information are going to do great action. So instead of saying why you're looking, my father had to change bank accounts, credit cards, on the matter of negative Equifax. It's 150 million people. Okay, I'm going to take it.
Sorry, thank you so much. What happened in Uruguay? People didn't like it.
Why?
The service was bad. This digital currency.
No, that was Ecuador.
Ecuador. Oh.
That was Ecuador. Ecuador has an issue that Ecuador, like Panama, have the U.S. dollar. And the thing is, in order not to, they invented that digital currency. That's why they
Мы как бы ваши медиапартнеры этого мероприятия. Было бы хорошо интервью сделать с вами. Можно слушать, конечно. Поэтому я так, например, хотел с вами пообщаться, чтобы договориться, когда 10 минут, почему здесь такой общий вопрос. Отлично. После, но на английском. Окей.
А мы можем снимать видео еще, вот, планы, как люди оживленно разговаривают. Да. Такое, что у нас много форматов. All right, 2 minutes to go. Milena, please help to bring people back. Okay, we start in 2 minutes. Please take your seats. Кирилл, помоги собирать людей. Yeah. Please take your seats. We are starting. Please take your seats, otherwise there will be loud noise and we will not hear. So there are many interesting people in the room. You will have a chance to talk after. There will be reception. Please take your seats. Please take your seats. Take your seats. We are starting discussion. No, immediately starting. Then you say in 2 minutes, then okay, I'll wait. Yeah.
You got Trigger and Rubini in the same place?
Yeah, I think so. Let's check if he is on Skype. Okay, take your seats. Please take your seats. Take your seats. Please take your seats. Otherwise, we can't start. Please take your seats. Would you help me to bring these guys to take their seats? Guys, please help me to bring these guys to take their seats. Yeah, help me to bring these people to take their seats. Hi, guys, please help me to bring these guys to take their seats. Otherwise, we can't start. It's too loud. It's too loud. Guys, help me to bring these guys to take their seats.
Okay.
To start. Otherwise, we can't start. It's too loud. Guys, please help me to bring these guys to the seats. Otherwise, we can't. Oh, he's still there, but so we need your help. Guys, please help me to bring these guys to take their seats. Otherwise, we can't stay.
How can I help?
You just give them example. Okay, guys, please take your seats and lead others people to take their seats. I will go. What, the t-shirt? Yes. Oh, okay, deal. Guys, could you help to bring these guys to start? Sponsors. And they follow your example. Okay, take your seats, please. It will be too loud. Надо всех посадить. Guys, please take your seats. Otherwise, it will be too loud to have a smart discussion. Discussion will be... Huh? Okay, no. Okay, so that's why I didn't want to take a break. Because people are so interesting in the room, so it's not easy to take them apart. They start to exchange ideas and think how to decentralize financial system. Okay. Who is ready to start? Did you like this round table? Sure. Great. Thank you. Yeah, let's upload. It was very, very insightful. Yeah. So I feel like there is a global central bank committee discussing the future of financial system. Yeah. All right. So the new financial system, could it be decentralized? So we have a decentralized type of round table where we start from the most kind of somebody who wants to start his angle of the discussion, he kind of just started, and then we make this topic deeper and deeper. When this topic fades away, we gently switch to another angle of the discussion. So who wants to start this? I will not moderate a lot, so you will have a pretty free flow of the discussion.
Me?
Yeah, and you can add some details about you, some of your personal story, and then go directly to the issue you want to raise.
Can everybody hear me?
Okay. My name's Greg Medcraft. I'm director of the OECD. I'm responsible for finance and enterprise affairs. I've been there a year. Prior to that, I was the chairman of the Australian Securities Commission and also the chairman of IOSCO, which is an international organisation of securities commissions. And before that, I was an investment banker on Wall Street for 30 years. So I've been on both sides of the street. So one of the things that the OECD that I'm responsible for is blockchain policy. We've just set up a blockchain policy centre. So it's an area of interest to us. On the issue here of decentralisation in finance happening, I think, well, it started, if you think about really before blockchain, is platforms of things like P2P lending, okay? And I think blockchain has somewhat accelerated it, frankly. At the OECD, we acknowledge the trend, and really what we're aiming to do is to help governments respond to the opportunities and challenges. And to that end, in September, we had a blockchain policy forum, and we had something like 1,200 attendees from 60 countries, from both industry and policymakers. And we had, interestingly, 25,000 people online. So there's a lot of interest in this area. But our priority is to cut through the hype and to make a sober assessment of really what the opportunities and challenges are. So we have actually done a series of reports on blockchain ICOs, which we released last week, looking at blockchain in equity markets, looking at in transport, really just examining it in a number of different areas. So, based on our reports and analysis to date, we've seen a technology that I think is very much in its infancy. There's plenty of use cases and pilots, but there's very few, if any, commercially scaled solutions. And I'll probably make just two brief points. One, blockchain and DLT are responding to an enabling demand for decentralization. They're not driving it. There's a demand. This is demand driven, okay? So businesses and consumers want more efficient ways of doing things, and often that comes also from a deficiency in trust in the financial system's intermediaries. That's the first point. The second point is that the totally decentralized, controlled by everyone and no one blockchain networks, which have sort of come to dominate the debate, like Bitcoin and other cryptocurrencies, are probably not where the future of blockchain lies at all. That's my view, and I've been looking at this for a number of years now, both as a market regulator and at the OECD. I think after all, you think about Bitcoin and others, other cryptocurrencies that don't have anything behind them other than user demand. I think largely today, what they're largely based on is expectations of future value. And put it another way, just mere speculation. So when it comes to cryptocurrencies, the one thing I think that is very interesting is the prospect of central bank digital currencies. I think they offer many benefits, and I think they will appeal to much more mainstream use without the downsides. Another sort of, if you want derivative of that, I think stablecoin, basically tokenized fiat currencies, I think is an interesting phenomenon if they're properly structured. But I must say, I do agree with Professor Rubiani that, I do see it, that, central bank digital currencies, it's really just frankly a matter of time. It's something central banks have been looking at for a number of years, 5 years. And I know from my time co-chairing CPMI OSCO, which is central bank payment systems and market regulators, it's not something new for them in terms of looking at it. But that doesn't mean that blockchain has no place in the financial sector. Blockchain, can be instant, it can be programmable, and it can be predictable. And I see a lot of potential efficiency gains. But I think it's still, I think it's one of its benefits is that it is really a good way to govern interactions between parties, such as competitors or where they don't perfectly trust one another. But what that means is that it's all about the governance of blockchain and DLT networks, which I think becomes sort of, if you're going to have trust, you've actually got to have good governance, and that's really central importance. So blockchains in finance are going to be more centralized than basically big, slow, open networks which rely on mechanisms to sort of between anonymous parties. I think what we need to do is start paying attention as to who owns and controls the networks and what decision-making protocols are and whether they actually do what they claim, because I think there's actually a lot of gaps on that, frankly. But at the end of the day, blockchain may well be a glorified spreadsheet, as Professor Rubiani stated in his article. And actually, yes, but I don't think. But is that I don't think that's. I'm actually praising you, Neil.
Yeah, yeah, I know.
But that's not a bad thing, okay? Because in our data-driven digital economies, most of the economic value will come in some form of glorified spreadsheets of some kind or another. So, but we think about it might be a spreadsheet, but or you might describe that, but it's got pretty good enhancements when you think about basically the big thing with spreadsheet often is the fact you can't trace what changes have occurred in it. With basically blockchain, basically you can actually follow the changes that have occurred in it. Secondly, we know that with the encryption, it's trusted. It's a trusted spreadsheet. So, I think the two arguments there are reconcilable, frankly. And as we know, it just has potential to be such a powerful tool. And I think we've just got to make sure that we remain realistic about what it can or it might do. Okay, so I think it still has. We're in very. I think as many people say, I think we're very much in a journey. People would not be spending billions of dollars developing new blockchain business models, and I can tell you if there wasn't something there in terms of efficiency. So, I think it's going to evolve. I think the next 2 years, we are going to see probably of evolution of more scaled uses like the Australian Stock Exchange clearing and settlement system, but it's just going to take time.
I'm Lawrence White from George Mason University. The question our panel is supposed to address is decentralized currency and financial system viable? And I may be the only one here, but my answer is yes. I think we got plenty of historical evidence on that. I mentioned last night that my research prior to the invention of Bitcoin was on private decentralized currency systems in an era before there were central banks. And these systems were competitive and they were stable in countries that had just a minimum of legal restrictions on them. So in particular, I studied the system in Scotland. Other people have studied Canada, Sweden, a number of other places, Switzerland, that had very successful what were called free banking systems. So we can have a decentralized system. There was a common monetary standard, but it was not issued by any one party, right? The production of gold is distributed around the world. No one party controls it. So that makes it a decentralized system. And then the banking systems on top of that were decentralized. Commercial banks issued their own claims to gold in the form of banknotes. It developed into a very sophisticated system. Wiring money began under the gold standard. In fact, it was the killer application of the telegraph to move claims to gold instantly from city to city. So there's no sort of technological barrier presented by the monetary standard being a commodity rather than being a fiat unit or being a cryptocurrency. So I naturally took great interest in the development of cryptocurrencies because here's a apolitical monetary unit, again, coming on the scene. And the question is, will it attract users? And it's a very difficult thing to launch a new currency and attract a critical mass of users because there's a massive network effect in everybody being on the same monetary standard. And that's why it became a worldwide gold standard, because it paid more and more countries to join in. So it's going to be very difficult to shift to one world monetary standard from where we are today. There are, in a sense, too many competitors to be the new standard. No one of them is, Bitcoin, of course, is ahead in the cryptocurrency space, but compared to fiat currencies at its peak, it at one point reached number 6 among world currencies, but of course it's much lower now. So because of the incumbency advantage of existing fiat money units, I don't think we're going to move to a decentralized system unless the public demands it, unless there's a political demand for it. And if we look at where countries have changed their monetary standard without the government sanctioning it, it's in cases where there's a hyperinflation. People will dollarize themselves. But it takes a very high inflation rate for people to make it worthwhile to be an early adopter when you want to use the money that everybody else is using. So absent some kind of hyperinflationary or at least chronically high inflationary crisis among the fiat currencies, I don't see spontaneous adoption, but in a sense, that's a good thing. So as long as central banks control themselves, they can maintain their market share. But I think it's important to maintain openness to competition among currencies. So in any country, not only should you be allowed to use the government's currency, but the currency of any other government around the world. You should be free to use gold-backed currency. You should be free to use cryptocurrency and let the superior system win. If there are other features besides having commonness, having a critical mass that are more important to people, for example, privacy, then let them express that preference in the market. And I think generally in the debate over cryptocurrency, there's kind of been two extremes. There's been the famous phrase attributed to Paul Krugman, Bitcoin is evil. And the phrase associated with Professor Rubini, Bitcoin is a mother of all scams. I think that's a little too negative. I think some of you may agree that it's a little too negative. On the other hand, I have my friends on Twitter who are Bitcoin maximalists, whose motto is Bitcoin is flawless, and even its mechanism for correcting its flaws is flawless. It's so flawless. Well, I think actually the altcoin central banks currently invest in treasury bills and mortgage-backed securities in the US, more broadly in some other countries. But we don't want those kind of allocation decisions being made privately. We want business loans being funded through the intermediation system in a decentralized, competitive way, so that if you want to start a business, you don't go to this, or you want a loan to finance your business that's already up and running. You don't go to the central bank with your hat in your hand, and if they turn you down, that's it. You want to be able to shop around among different retail banks. So any central bank retail deposit system that doesn't preserve that kind of competition in intermediation is very dangerous.
Okay, maybe I'll take
Alex.
Yeah, let me first, before I say what I want to say, I just want to react to your last. First of all, I agree with everything that you said, except for the last point. That is, the fact that there is a central bank digital currency doesn't mean that all the other businesses, including in particular credit allocation, is going to be taken over by the central bank. That is, all those activities are going to remain within the private banking system. And the private banking system, as was pointed out by Professor Nouriel Roubini, my longtime friend, and et cetera, et cetera. I do not want to add to that. I saw him grow up. So really, it's like a child to me. It's all those other activities, except the one of just providing the means of exchange, are going to remain within private institutions, and in a narrow banking system, which may not be attainable, politically speaking, immediately, but maybe in 10, 20, 30 years, God knows when, nobody knows, may be attainable at some point, which is the most efficient one. Then there is going to be a complete separation between the business of providing a stable means of payment in terms of a purchasing basket that people care about, not in terms of gold or silver or diamonds or all sorts of gimmicks of this type that were good at the time, in the 19th century, in the 18th century, because all the sophistication of financial networks that we have today did not exist, and people didn't know about it. But so they used gold because it was rare and things like that. Because this is what nature sort of provided naturally as a safeguard because it was rare, because it was very hard to actually dig the gold and things like that. So it was a natural limit. Now, instead, I think now this limit is imposed today by the miners of Bitcoin by issuing at one stroke at the beginning, a fixed amount and letting it know, if you believe that, this amount is going to be fixed forever. Who knows? Is it going to be fixed forever? Who knows whether it's going to be fixed forever? That is, no government is going to last forever. Is there any private entity that is going to last forever? Now, I think, we heard a lot of arguments here about, why, central banks are, could be manipulated. It's true, they could be manipulated politically. And there is pressure, political pressure on central banks. It's also true, there is political pressure, but there are also checks and balances. What are the checks and balances on those 150 miners of Bitcoin that hold, according to some statistics, about something like between 30 and 50% of the total supply of Bitcoins in the world? Who knows who they are? Who knows who they are? We don't even know their identities. They are not elected. They are not under any kind of supervision. So there are risks there. And I'm told by one of the guys here who comes from the technical side that both the blockchain can also be hacked. It can be hacked. It may, it is, it may be difficult, but not impossible. There is a small probability that it is happened. So there are risks here, there are risks there. I think it's very dangerous. And you said it yourself. The truth. On the one hand, you have those, enthusiasts of this new technology or something like that, that think that it's going to solve all the problems of the world. This is nonsense. On the other hand, you have all those that say that that this is really just a rotten pear or something like that. This is also exaggerated to a large extent. The truth is in between. So this brings me to the main point that I want to make. And that is from a welfare point of view, and I think as an economist, I think about the welfare of the entire society or something like that. Is there room both for supply of, first of all, let me grant one thing. I think that the big comparative advantage of the blockchain technology and all those fintech and things like that is not so much in the area of supplying an alternative to fiat money, whether it is in the form of paper or in the form of digital currencies. I think it is in the form of actually providing easier access to banking services in countries in which most of the population doesn't have easy access to credit, like China, like Africa, and things like that. This is a tremendous revolution for those countries. And we who come from the developed world, we don't appreciate that. But this is really for them a major kind of thing. And this is going to have, I think, very important repercussions in the world. So this is one thing to note that is very important. But also, it is also going to make the business of transacting in all sorts of financial assets, risky assets, and so on, much more efficient, and also the costs are going to come down. So I think this is another thing. But in terms of providing a safe means of payment that has those three characteristics, stable and numeraire and universally acceptable, and things like that, you know, it seems that central bank money, and I agree with that with Nouriel, it really dominates everything else. And my advice to, you know, to those people that deal with those things, which is most of the audience over here, is, you know, put your energy mostly in this direction rather than in the direction of replacing, you know, the means of payment, because this is not where your comparative advantage is. You know, the comparative advantage is in all those other types of things. So this is, you know, one point that has to do with the separation. Number two has to do also with the remember that the technology, you know, there are risks in the technology. You know, something being completely anonymous may have some advantages, but as Nouriel has said, you know, no government is going to tolerate complete anonymity for good reason, because, you know, this is going to basically the first that are going to use that and are already using that are basically, you know, the